Hi guys, so I realized that I'm going to be speaking in two languages that are a bit alien for people here today. One of them is not that alien, which is English, because everything else has been in Polish. And the second thing is, I just returned from San Francisco. I was there until Saturday, and I learned a whole different language called blockchain and Bitcoin. So when I got here, I was sending the presentation last week, and I messaged Sasha, and I said, my topic is going to be financial inclusion and innovation. And I said, you know what, my topic's changed. It's blockchain innovation for financial inclusion. I really can't undervalue and stress how important this change is going to be. And by the way, I'm no preacher for this. I just realized that back in 1999-2000, there was a very famous editorial in the Telegraph newspaper in England which said that the internet is a fad. It's going to be as relevant or irrelevant as a fax machine. And I realize there's a lot of people who look at blockchain and cryptocurrencies the same way, thinking this is a fad, this is tulip mania, this is a frenzy, this is, call it what you may, something that's not going to exist because it's too hyped. Yes, it is hyped. Guess what? In 1920s, the stock exchange was hyped as well. And we had a crash in 1929. And what happened afterwards? We're all participants now in the equity culture, aren't we? This is not going to go away. Yes, it'll dip. Yes, there'll be some kind of slide, but this is going to remain here forever. I realize my thing is slipping. But anyways, hopefully you can still hear me. So let me start by what I was here to talk about, which is the financial inclusion and innovation required for financial inclusion. We talk about financial inclusion largely in terms of banked versus unbanked population. And there's reams of people across the world who are not banked today. India tops that list. I was born in India. I can speak about it firsthand, although I grew up in Canada, hence my non-Indian accent. 20.6% of the world's unbanked population is in India. And you can see the statistics around that as to how that translates for other countries. Now, 20.6% of about 1.2 billion people is a lot of people. And remember, this is the second most populous country in the world. In Poland, too, you have 22% of people who don't have a bank account. And a lot of people use investment requirements, fulfillment from bank loans. Financial inclusion is not always about being banked versus unbanked. It's also about access to financial services and lowering the cost of financial access. What is financial inclusion, therefore? It's about giving greater access, because when you think about a family in Bangladesh that has to walk for 2 miles to get to a bank account, a bank branch, that's financial exclusion. Never mind the fact that they do not have an ID card or a passport, never mind a driving license. They can't validate and verify themselves. That is financial exclusion. So our whole point about financial inclusion has to be widened out to not just unbanked versus banked, but by giving people access at a lower transaction cost, lower travel cost, ultimately lower opportunity cost. Now, Tomac spoke earlier on about a lot of the digitization that was happening here and the investments are there. That is really critical, because that is, to me, kind of what Web 2.0 was, if you may. It's a digitization of traditionally offline companies and business models. I think the next version is the blockchain-based one, which I'll come to a little later, realizing I've got about 12 minutes to speak. But most of these companies you should be somewhat familiar with. Azim was a company that's based out of here in Poland and as well as England. I believe there's someone from Comply Advantage here speaking tomorrow. The digitization of traditional businesses is one part of bringing financial inclusion to a wider market. We look at financial inclusion also a little differently. My business does something in the InsurTech world, and it's backed by Rakuten out of Japan. It's backed by Tim Draper out of Silicon Valley. It's backed by the Thompson family out of Canada. And we do something very, very elegantly simple. We just make insurance pay as you go. And in some ways, you don't have to have digital transformations to make financial inclusion possible. You can change the business model. That's not to say we don't use B2B SaaS, we don't use cover APIs, but we also just make the business model very simple, because pay as you go is one way of bringing financial inclusion. You don't just have to have an upfront payment for things, but whether you're paying as you go for a shared economy car service, or a house that you're renting, or in our case, we just free up the capital required for paying for insurance, so you don't have to spend all of it up front. So you can buy 5 insurance policies now because you don't have to pay for the cost of one up front. You can spread your costs. And that promotes financial inclusion. In a world where average financial participation in insurance is 2%, that's a big, big play. Because your insurance right now is there largely for the wealthy, and what we want to make it is more accessible for people around there. Where is the world headed? Is there any reason why Facebook and Amazon won't become banks or won't want to be like banks in the future? No. But there's a bigger question, will they want to be like banks? Or will they just take out nodes that make the value chain more productive for them? Can they be a remittance company? Will they take on Asimo? Can they be a lender and take on credit tech? That's the question we've got to ask. That's what's going to happen. It's not going to be our traditional notion of, here's a bank, and that's the epicenter of financial services. There's going to be very bespoke companies that take out parts of the value chain and enhance it, and some of the contenders for that will be the non-traditional ones, such as Amazon and Facebook. Who thought that many years ago when Amazon started as a bookstore, they'd also be delivering our groceries and bringing out artificial intelligence speakers? That world is changing. So we look at the developed world and the sort of developing or fast-growing world, and there is a lot of potential for leapfrogging this market when you don't have a legacy infrastructure to contend with. So let's look at India, it's a place that I know well. 1.3 billion people, and they've done what is arguably the world's biggest database project. It is much bigger than the Department of Homeland Security's project. It's called Aadhaar, also called UID or Universal ID, where each person gets a 12-digit universal code. Now, if I can give you sort of suggest the implications of this, they're as follows. If a government subsidy is going to an end person, traditionally it would go through 6 layers. It would go from a federal government to a state government to a district government to an NGO to a person who represented the ultimate recipient, because the ultimate recipient didn't have a bank account. You got 6 layers there of wastage and pilferage. With the UID card, I could send funds directly from the central government to the end person. Moreover, I can make sure that that end person actually lives and exists, and you don't have somebody representing that person fraudulently and claiming some of the funds. So there's a total boost to GDP by this digitization of infrastructure. You can do away with ID cards and ration cards by getting people to actually be digitally existing. And that digital existence is what this ID card is about. It's one of the most aggressive database products I've seen out there, and one that I think has a lot of promise. Let's talk about blockchain, because obviously when we talk about sending money in that scenario in India, you're still going through multiple layers. And from what I gathered before in the conversation about in the Polish part of it earlier today about blockchain, does everybody get blockchain? Does everybody kind of understand what it's about? Yes, no, yeses? Okay, I'd say about 30% at best. So I'm going to try and simplify this. It's a bit difficult, but if I was to pass something down from here, because I could see you, and you could see the next person, you could see the next person, you could see the next person, I wanted to get to you at the end. In a traditional source, I'm going to be trusting you, you're going to be trusting the next person, you the next person, you the next person, because I don't have transparency and visibility into what's going on. With the blockchain, I'm using a direct interface between me and the end person, because we are using a protocol which is highly visible, highly trusted, and I don't need trusted intermediaries in between to get there. If I'm sending funds, I don't need to send money to my bank account in Poland that then talks to a bank account in India and then talks to a local branch and gets to a local person. As long as that person is authenticated, i.e. with the UID card that I just talked about, I can send money directly here, because one negative entry on my personal balance sheet or ledger here is going to result in one positive one there. Another way to look at it is, if you ever watched Star Trek and you saw Beam Me Up Scotty, this is instant Beam Me Up Scotty. You don't have to get into a shuttle and a transporter and get somewhere else. This happens instantly, it happens right away. The opportunity for this again is huge, because you can look again at the amount of revenue that banks can generate by bringing people on with a blockchain-based approach for financial inclusion. You can look at the gap in funding for small and medium enterprises that can be closed because of this. You can look at the impact on individuals becoming part of the system, GDP boost. The couple of slides before we looked at the different FinTech companies. One kind of metric for me that I've taken away from, especially my visit to California, is that the driving cost for blockchain-based transactions tends to move towards 2%. So what does that mean? The average cost of money transfers today is about 7.5%, right? You look at the average amount of money sent from overseas people to India, it's about 70 billion. You look at the average amount sent from overseas people to the Philippines, it's about 30 billion. So between the two geographies, you've got about $100 billion worth of funds being transferred, costing an average of 7.5 billion. If you cut that down to 2.5%, you're saving about 5% there. 5% of 100 billion is 5 billion. Where's that money going? It's going down to the people who need to receive it. That's an automatic GDP boost. And by the way, that's number 1 and number 3 remittance market. I haven't talked about Mexico or South America or China or wherever else. So right there you can see an example of efficiencies of lowering the transaction cost internationally for global remittances. Same thing for credit cards. Blockchain will take the cost down to 1 to 2% as opposed to 2 to 4%. eBay, does anybody have an idea of how much it actually costs to put a product on eBay today? The fully loaded cost? Random guess? 10%, yeah, close enough. It's about 12 to 14. Because by the time you say, I want to get my product highly visible, you pay for the banners that appear at the top of a search, high sort of visibility factors down to their fundamental cost of listing and transaction fees, etc. You heard about that. There's a whole bunch of people trying to challenge that model by having a blockchain and cryptocurrency based approach, which will take down that cost to about 2 to 4%. Again, driving force to me is always about 2%. So the notion of the internet so far has been a communications protocol. The notion of the blockchain is a value protocol. And just the way 15 years ago we saw, or 20 years ago, we saw TCP/IP, HTTP, and various other protocols, SOAP and UDDI coming along for transfer of information, we're now seeing the protocols being built for transfer of value. And that's fundamental. So what does that mean? You've got inclusion, you've got lower transaction costs, you've got more efficient transfer of value, and ultimately you see a replacement of fiat currencies to a large degree by cryptocurrency. That doesn't mean complete replacement. There are some people who do believe that, and Tim, who's a famous VC out of California, one of our shareholders, says that it'll be obsolete in down the line to talk about fiat currencies. I personally will contend that. I think there's a mutual coexistence. But let's be sure that these are here to stay. Because when 5% of all transactions today in Venezuela are based on cryptocurrencies, this is not just a passing fad. You know that when people are looking at putting their money in Zimbabwe or Nigeria in a cryptocurrency because the value that is preserving goes higher as opposed to their local currencies, this is here to stay. And it's only a matter of time before more and more people start doing this. It does remind me a bit of the kind of dot-com mania, because it is, I've got friends saying their kids are putting money into Bitcoin and the taxi driver starts offering you tips and it's gone a bit out of whack. But it is only there as a froth. It doesn't mean that the paradigm shift is not occurring. In the VC industry itself, and we had, for the most famous VC in Poland speaking just before me, there's a whole new paradigm for raising funds, which are being referred to as ICOs, initial coin offerings. Why should it be that I have to go to a very close group of investors in a very clubby kind of way across the world to get my startup funded? If I can distribute my idea through a white paper and I can get it out there through the internet, why should people who get my business is about invest in my company from wherever they are in the world? So regulators are having a really hard time with this because their notion of an accredited investor is somebody who's very wealthy, who can afford to lose $10,000 or $5,000, and that's their metric for what makes an affordable investment and an accredited investor. Well, if there's a professor who's making $20,000 in Kenya, but who's a professor of some retail distribution model of economics, why can that person invest in an online retail play? Because that person actually is much more knowledgeable about that startup and now can participate in that startup in the next Amazon, and it doesn't have to be restricted to the Silicon Valley VCs. That notion of going to a small, closed group of investors through a clubby proprietary process is being challenged. Now, yes, the process of that has led to this wave. There's been more invested in startups through initial coin offerings this year than the entire seed stage VCs worldwide. And you can see what that means across the world. It's been unbelievable. The last few months have been absolutely insane. And that does mean there are some scamsters out there. That does mean there'll be some really nasty stories coming out of people just walking away with money. But that doesn't take away from the overall trend that we're seeing. The good news also is that in October, 80% of all ICOs actually failed. So while a lot of them get a lot of hype, they've set minimum thresholds, and 80% of them were not fulfilled for the minimum threshold, so they were considered not to be successful, and they didn't actually proceed. That to me is a nice correction that's happened. That's good. Some governments, of course, have reacted, especially initially, with a lot of caution, and sometimes just banning things outright. And if anybody followed the news on ICOs, you saw that China banned them last month. Well, just as China banned them, they mushroomed in South Korea and Japan. And of course, you can argue whether China's banning them or just trying to figure out a way of how to control it, because ultimately that's what they're doing. If somebody saw the news today, they're doing the same thing with micro-lending. They're just banning all the small micro-lending sites, but guess what? They'll have a state micro-lending site, and the large players like Tencent, etc., will have a play there. So it's not being banned because they don't like it, it's just because they want to figure out how to monetize it and control it. And that's changing across the world. Estonia might actually have an ICO. Japan, South Korea, Canada's emerging as a really strong contender. What's happened there is the regulators have traditionally been cautious, and if you look at crowdfunding, they were very, very cautious. But when the blockchain came around, the regulator in Quebec permitted the first regulated tokenized security token ICO. And that's led to this strange competition amongst regulators across Canada who previously were basically blocks to innovation, are now competing with each other to get most innovative. And I argue that Canada is one of the most liberal places today for cryptocurrencies and blockchain-based initiatives. And England, which is where I live, in London, which has traditionally been very innovative and open-minded, is actually being left behind. And they better do something about it, because between that and Brexit, things could get rather painful. But there's also the flip side, which is the B2B side. There's a whole bunch of blockchain-based companies and initiatives on the B2B side, from large financial institutions like Deutsche Bank, Goldman Sachs, and despite what Jamie Dimon might say about cryptocurrencies and ICOs, I can tell you 40% of the staff are probably trading cryptocurrencies right now. When I was in California, it was at $7,000. Now it's above 8,000. And Tomac mentioned earlier about Square. Well, Square decided to accept Bitcoins. And guess what happened to the price of Bitcoin? It went up 12% in one day. So you got to separate out the blockchain technologies.
How much Bitcoin you have in your portfolio?
Exactly. So, you can look at the comparison. If you put $100 in Bitcoin many years ago, where that would be today versus putting it in Apple, but that's for a different time. And it's also important to separate Bitcoin from blockchain from ICOs. Blockchain is a back-end technology. One expression of that distributed ledger technology, or DLT, is the Bitcoin. Another one is, of course, Ethereum. And ICOs are a way for accessing capital using a cryptocurrency. I can talk a lot more about this, but my time ran out a few minutes ago. What I would like to, I guess, end by saying is paradigm shifts happen very, very slowly and very, very quickly at the same time. And if I look at the agenda here too, I think if it was drafted about a month ago, things like blockchain were probably not on the agenda as much. And now if you look at it, there's a whole bunch of workshops and sessions around it. And the shifts are most likely and most formidably taken on board by companies and countries that are most enlightened about it. If the US had started taxing internet commerce in the early days, we would not have had Amazons and eBays the way they mushroomed. And today, some countries that may have lacked some of that revolution, particularly sitting here, and I look at Eastern Europe, Poland as a really, really good place to start that, because you have less of a legacy infrastructure, and the ability to put insurance contracts as a smart contract to make transfer of funds through Ripple or the protocols for back-end technologies is incredible. And if you don't believe me, let's have a conversation 6 months from now, because I can tell you, coming back from the States, there's walls of money coming this way. From Fidelity to Goldman Sachs to JP Morgan, never mind Jamie Dimon, there is lots of money headed this way that tackle the big problem of financial inclusion, not just in the States, but worldwide.